Hey guys, Simon Davis here, Zone Trader. I hope you've had a great day and I hope this video makes your trading even better. That's my aim, is to basically help you become a better trader with the concepts from ICT simplified by myself, trying to anyway. So here we have a daily chart, and today we're going to be talking about how to trade with the trend. Like, I've got the EMAs on here and I try and trade naked, but if it shows me the direction like 90% of the time, I'm going to want to have it on my chart. And if it shows me time and price, like these lines I'll go into, then I'll want to have it on my chart, certain like sessions and stuff. So we've got the 9 and the 18 EMA. So we can quite clearly see that when they cross and split, we're in a downtrend here. But you're probably thinking that's obvious, but it's not obvious when you're so close on the hour or the 15-minute chart. It's not obvious. So we're in a downtrend there because the 18 is over the 9. And we're in an uptrend here, downtrend here, uptrend here, and then a sideways action and down, and then we're heading up. In case we bounce on this order block, we might be going down, or this one definitely. But there's a lot of stops up here, but that's for a different coaching. So what I've done here, guys, is I've got the 9 and the 18 EMA, and then if you drop down to the 4 hour, these are still representing what is on the daily. So you don't need to be on the daily to know. And it gets very interesting when you go down to the hour. I'll show you. So we've got downtrend here on the daily, so you only look for sells in this price action, only look for buys once it's peaked through there, unless you catch the turtle soup reversal or the breaker reversal. But I'll go through the rules as we go anyway. So we're in an uptrend here from when it peaks through and this crosses. We're in an uptrend on the daily, which is powerful. And then on the hour, I've done them the same. So the numbers on the 4 hour are 108 exponential moving average and 54. On the hour, they go insanely big, but they represent the daily. So we've got 216 and 432, and I've even went down to the 15-minute chart, guys. And then you've got 1,728 and 864. These EMAs are exactly the same on the daily, 4 hour, and 15-minute chart. So what I tend to do is even just practicing it and trying to get my mind around when to trade a downtrend or when not to trade an uptrend. I basically do this. So I'm on the hour and we've got the daily, so we know that we're in an uptrend from here. So this order block here, you pull across and then you just wait for price. So say we're here and we see this order block, say we come onto the charts and we're like here. Okay, so what do we see? We see price has come along on a reset consolidation, straight consolidation. It's peaked over the EMAs, and then the EMAs have crossed. They hardly ever cross, guys. So this means that a big trend is on its way. This order block is the main order block. You could even draw this one in, but it never really touches that one in. But it might have, you never know. So it creates another order block here, so you know that this is a more dominant order block. An order block is where smart money buys in down candles and then the market shoots up. We'll eventually come back to it and look at the response. So then you see an order block here and also an order block here. So we're only going to be trading up because the trend is up on the daily, because our EMAs are green over red. Here's a reversal turtle soup. It's for more advanced and confident traders, because the price has gone so far away from the EMA, it's going to spring back a bit like equilibrium. Okay, so we've got order block here, never quite gets to it. And we've got an order block here. And these are big moves, guys, like 200 odd pips because we're on the hour. And we're not going to be selling because the EMAs, the green is over the red. See how powerful this is, guys? Like, how powerful and simple it is. It's got an order block there, a represented 2-hour order block. You can join them if they look like they can join, you join them. To get if they're close together, you can join them and make one order block. Then we've got another turtle soup reversal because it's away from the EMAs. Doesn't mean that the trend's ended, it just means that they're coming down for lower prices. Then it consolidates again. Then you've got your order block here to buy again. And then we have an order block to sell because we've got a straight recess as well. I'm in a range, we're in the top part of the range as we mentioned the other day. Into 4, the top 25% we look for sells, so it sells. And now we know that we're underneath the EMAs, which means we're selling. So we draw this one. It's not a big candle, best go to the wick. And then to the pip, guys. Like literally to the pip entry. Yeah, you might have to wait a day and a half, but do something with your life. Don't watch it, just put an alert there and change your alert to something that recognises Great Britain USD or whatever pair you're on, or something like that. So, okay, so we're looking for sells there to the pip again. The reason why I'm marking these off is these are order blocks and we're only looking for sells. See how powerful this is, guys? We don't need to go to the daily to look, because we can clearly see that the EMAs, like I'd have a bit lighter, but I think green and red work well because you don't look at them and use them like retail market traders use them, but it just gives you a nice trending opportunity. Basically, it shows you that you're in a trend until you get, I mean, it's not going to work all the time. Say you thought this was an order block, you would have lost here, but how many have we won? But you can bring that one over and get this one that's more advanced because it's over a few days, but and then we sell off and we turtle soup that. So this is actually a fake move up. They haven't crossed yet, you see. You don't trade the other trend, like you don't trade the opposite trend like from down to up or up to down until they cross the image or bounce on top and actually go into a consolidation, which is reversal, and then we look for buys. So you probably might have lost money here, but with this gap and this gap filling, you probably get out before. If you put a pending, you probably take it out anyway. Day and a half to get out before it triggers your pending. On here, market shoots up, middle of the order block, and and then continues a rally on up for at least 200 pips there. Turtle soup, and it's away quite got a big distance. Also, we've got a big distance away from EMA here for a turtle soup, but it's more advanced. Not quite reached that one, but still. Probably lost money on this one. Trading's not 100%, this is more of a 90% thing. 90%, 3 to 1, can do a lot of damage. Not damage, but a lot of good. Damage to the market, but good to your bank account. Okay, so it's a bit iffy when you're trading, like this technique doesn't work across all market conditions. The first thing you do when you come on to the charts is, are we trending or are we in consolidation? I've made this. So are we trending? What is the current market condition? Range bound or trending? If we're range bound, as I talked about in the other videos, is priced in top, middle or bottom of the range. If top, look for turtle soup to sell back to equilibrium. In the middle, look for dominant order blocks either way up to the edge, back to the edge of the range. The bottom, look for turtle soups back buys, look for turtle soup buy back to equilibrium. So that's turtle soup sell at the top, turtle soup buy at the bottom. And then if it's trending, as I was saying, you look for bearish. If it's bearishly trending, and you know it's trending because the 9 and the 18 EMA have crossed and going up, going down to bearish. Look for bearish order blocks in the direction of the EMA trend. Bullish, look for bullish order blocks in the EMA trend, and that's it. Two rules are: don't trade in the opposite direction of trend unless you see a market reversal, and never ever ever chase price. If you follow these rules, guys, then you will be a phenomenal trader. It's just having the discipline and patience to wait for these one shot, one kill scenarios. So look, it's crossed over, and now we're going downtrend. We'd mark off this order block, never quite get to it. That's okay, not to worry. We could mark off this one, kind of a sloppy one, but still works eventually. So you don't actually trade. You could get in here, but if you got the middle, you don't actually trade this day, but you do trade this day, and then you catch a nice trend down. Then we're in consolidation. You can actually trade, scalp these mini consolidations if you wanted to with Turtle Super C. If this is an hourly consolidation, you would have your equilibrium in the middle, like I said on the other video. Then you get your top lines to the pin, to the wicks. I'm just doing it sloppy for now. Split it into 4. I showed you how to do this, I'm just doing it quick. When it comes into the bottom, you look for turtle soups, which means price creates a low, goes up, creates a lower low, and when it comes through this low, then you can buy. But tight ranges, scalping is not very good. You want to be trend trading, unless it's a big range bound market, then you can do that, but this is blatantly a small range of only 50-60 pips, so take what you want. So now you can see, guys, that we've come from a downwards trend, a reset, and then we're going up again because we've popped over the EMAs and then eventually cross. We're in confirm, we're completely confirmed that we're in a downwards trend. So on this day, could have got in here and took profits above the stops here. Now we're going into consolidation. I believe that we might I'm not sure whether we're going to come down because this is quite a dominant order block on the daily, which is powerful. Because you see this order block on the daily, look how powerful that is. On the daily to the wick almost, and you get a beautiful bit of sell off there. If you brought it down to the halfway between the bottom wick, get another entry to sell off here, which is phenomenal. This entry was on the daily was fair value, because you've got fair value entries as well, which is half a big voided candlestick, and then rallies off. And look where it ranged, where we talked about the range. It was down here, wasn't it? Yeah, doesn't matter. So this is how to trade a range, guys. Sorry, this is how to trade a trend using EMAs. So what I'm going to do now, I'm going to drop down to the 15-minute charts, go to the hour to clean that up, because it's really not good for my eyes. All this mess we don't need. I'll keep the lines on because it's order blocks, guys. So I'm going to try myself personally is try and just trade on the hour and enter on the 15-minute. I'm trading from the daily direction with my EMAs without even going to the daily. Obviously go to the daily to check for corresponding order blocks, because sometimes you might have a contradicting order block. Like you see here, that's a contradicting order block on the daily, and you don't look for buys now because it's in the line of a contradicting order block, which is an order block that's going to basically take you out of trend for a short while or a long while, which in this case is a long while. It's got 1, 2, 3, 4, 5 days where it touches this order block. Price does not close above the midpoint equilibrium of this candlestick, doesn't close above and then sells off. Man, these days you can, especially when it's come back up to another kind of order block there. Don't like ones that price go above, but still work sometimes. You can leverage your account a lot if you enter on a 15-minute or a 5-minute. You could leverage your account more, double than what you normally do. So if you do 2%, you could double it and leverage it 4%, because such a certain trade off a daily order block like that, it's been touching it, it's not breaking through it. Brilliant. So what I want to show you guys is from where they start. We've got up here we'll do. This box here, these lines, is Asia. So we can mark off this candle here for a nice sell. This line here is New York, midnight at New York. This candle here is midnight in New York. Draw a line across the charts. You can have an indicator that does it as well. It's a daily line box indicator that does this. And it marks your charts off with New York every day. So then you know where New York open starts. And smart money will start selling, like not selling the market, but selling their buys and start buying their sells. That's why the market goes up and down above this line. So in this candle here, they are selling their buys, so then they push the market down, and then they're buying, they're selling in these candles. Smart money does the opposite to us, so they buy in down candles, so they're basically letting go of, like, selling all their long positions. That's it, they're selling all their long positions and they're accumulating shorts in the upwards candles. and the last one there is named an order block, and then the market goes down to this one. Asia again. What I've noticed with Asia is if it's a small range, Asia, it normally breaks out, accumulates contracts and then drops. When it's wide, it doesn't really break out very fast. It like has a seek and destroy day kind of thing. So you got to watch out for that when the Asian range is wide. So here's a scenario. We've got the red line, the green line. Excuse me. We've got the red line and the green line. We're blatantly in a downtrend. So you draw this from the previous day and then you just wait for all this. Wait for it to hit that order block. And then you sell off. Smart money is selling above this line. You need to be selling above this line. Order block again to sell off. We know that we're in a downwards trend because the EMAs are above and they've not crossed yet. So we just keep looking for sells. This is an order block, and then we sell off. And notice that you're not in much trouble with most of these, like only 10 pips there, 30 pips stop, you're safe and you make money. And market reversal. We reuse this order block as well to sell off. Also, it creates another one to sell off. If you missed that one, you've got New York session, because you've got London, New York, London close. So I think we've covered a lot here today. I'm not just going to go through every single one of them because you can do this in your own chart. Seek and destroy day, nasty. Getting ready for a reversal maybe. See, we are locked. See, seek and destroy, accumulate contracts high and low. But guys, when we click onto this, so say for instance, we're here and we think, oh, we might be getting into a range. You can mark it off and then just start trading range style instead of trending style. So you look for turtle soups, there's one. And order blocks. And you can trade both sides of the range if you've got your equilibrium, which is in the middle of the range. Once the range expands, you can also expand your equilibrium as well. Expand your range bound markets as well. And then until it breaks out. The other day I mentioned you can draw a line from there and then catch the breakout on the reversal. So it comes up through the range bound market, back onto it and up. And I've marked one here. Range. Market comes up, out of it, back onto it and up. Yeah, so I think we're pretty much done. Go run your own charts, study what you've learned here today, and that's how you're going to become familiar with it. Nice order block there. Take it to the top of the wick, almost there. Almost. Beautiful entry, and it's around New York close. Kill zones, guys. Look for entries and exits. Sorry, entries in these kill zones. Times are, I'll say it in UK time, 7 to 9, 2 to 4. Sorry, 1 to 3. 7 to 9, 1 to 3, and 5 to 7. Yeah, 5 to 7. You got kill zones, as you can see here. Got. Don't worry about Asia. Asia's not red. Don't worry about that. Close trades here. Open trades here and here. If you see a setup. So yeah, there's 24 hours in the day, but see, look at this. For argument's sake, look at that. Perfect power of 3 day. We've got Asia, drops under Asia, takes stops into the London session, into an order block, and then rallies for the day. Beautiful power of 3. Power of 3 is manipulation down, up, and then a slight reversal. I'll go into more detail about that on another video. So we're here now, current market conditions. As I mentioned before, we're probably going to continue going up to take out stops here, because the market just wants to reach for stops. That's why the market moves. We've created a range as well from here to here, and it's unfulfilled up here. It's easier to get up here than it is to get down here. Therefore, the market's going to continue up, and we've just crossed the EMAs, and they hardly ever cross, guys. If you plot the 9 and 18 EMA on your daily, they hardly ever cross, and when they do, and they split, it's very nice, and they go up for, the market goes up for a while. So what I'll do is drop down to the hour, and I've already done it, mark my order block, and on Monday, I'm going to wait for the market to come back to here in London. There'll be a red box here, round about, sorry, here. So in London, I'll wait for it to come down, take out stops from London, take out the stops from Monday Asian session, and then we're going to probably see a bounce off London, or to take out these stops at least at 70 pips. Goes to the hour, yeah, we might even head to, yeah, 70 pips taking out these stops. Then we probably consolidate again and hopefully continue to take out these stops. So if you're thinking about it, we're here and then you've got stops up here and you think the market's going to go here. We've got 200 pips to get there, so if we can get 100 out of there, when we've got a big enough account size with a pound lot, made a grand just trading one pair. Anyway guys, I've been Simon Davis, Zone Trader. Hope this has helped you in your trading career. Hope you'll be able to follow trend better, know when the market's trending with the 9, the 8 EMA. And you can also try this little trick of dropping them from the daily to the 4 hours to the hour to 15 minute. You might not want to, but why not? Instead of always going to the daily and thinking, is it on the, sometimes you forget and you make a mistake and trade opposite. But if they're in your face, then you're blatantly not going to sell when they're below market. Sorry, when you're above market EMAs. You're blatantly not going to sell. Unless you want to scalp. We're not scalpers, guys. We're one shot, one kill. Minimum 30 pips. ICT says if you don't get 20 pips out the move, then what's the point? Okay guys, thanks again for listening. I'll see you on the next video. Bye for now.